Good morning, ladies and gentlemen, friends and colleagues. Wonderful to be here today. I'm coming to you from the eastern coast of the Western Cape, and yeah, I just do wish we were in fact face to face. I heard the Secretary General or Dr. Talib Rifai say we're going to meet together face to face, and I will certainly be your host when you come to the Western Cape. So I'm very excited to be here today. I think we all understand the devastation that's happened in the tourism sector. What we're going to speak today is we're going to get the view of two economists around how investment is going to ensure that we have the bounce back that we hope and expect after COVID. So I'm going to share very briefly, it'll take us 2 or 3 minutes, a couple of slides just to set the scene. Here we go. All right, so let me just get to the top. There we go. So when we look at the tourism sector, I don't think the question is, can tourism bounce back and recover? The question is, how will it recover? We have no choice. It is the bread and butter for many countries, and it's so crucial that post the pandemic, we see a bounce back of this crucial sector, and not just tourism as a sector for travelers, but the whole value chain that tourism creates in the economy. So just a quick reminder, one has to put into perspective that 10% of the global GDP, almost $9 trillion US dollars, was accounted for by travel and tourism prior, I'm going to say BC, before COVID, and 330 million jobs, 1 in every 10 jobs globally have been tourism related. So, and tourism also has outpaced the rest of the global economy. When the rest of the economy in the last 5 years has grown by 2.5%, 3.5% was the rate of growth of the tourism sector. So it's unfortunate that in a time when the global economy has come to a standstill, not only has tourism been the hardest hit, but it's also been the hardest to bounce back just because of the current restrictions. I think we also mustn't underestimate what the postponement of large events like the Olympic Games or Wimbledon or something like the Cape Town International Jazz Festival, or even the WTM conference that would have brought all of us to the shores of Cape Town, contributing to the GDP, just to see the movement. And those kind of events have a huge impact. So a couple of important trends and changes post-COVID in the world of tourism is that we have seen a huge capacity and inventory decline. We will see new health and safety regulations that simply fundamentally change the way people move. And most importantly, I'd like to speak with our two colleagues today is how has the investment climate changed when we look at the tourism sector. But I think there are some we can be cautiously optimistic. I think there's a pent-up desire amongst people for authentic, original experiences, and travel within Africa, both from outside of Africa to our continent and between destinations is what you cannot find that anywhere else in the world. You simply can't. And even the idea of people working from home and working while traveling, I think we've proved today, all of us are sitting literally in different continents, different countries, and we can still operate and be functional. So what's the outlook or the projections? We expect that after a huge decline, one of the biggest recessions our globe has ever experienced in at least the last 50 or 60 years, we expect that the GDP growth globally, or in Africa particularly, to be a positive 3.4% in the next year. Perhaps you can comment if you agree with me. The problem, however, is that many African countries are highly indebted, and some of them are 10 to 15%, have a debt to GDP ratio of 10 to 15%. And how is that going to impact on our ability to reinvest? So there are, of course, some downside risks. There's the possible resurgence of COVID. There's always the issue of social tensions, security concerns. Ambassador Ojakal, I think you said in your recent writings that you think security concerns are a real issue on our continent. But the upside, of course, is the deployment of vaccines. And we will hear from our colleague from Afrexim Bank what they're doing as a bank to actually make that kind of thing possible. And I think quite central to our conversation is this this fundamentally new approach, the Africa Continental Free Trade Agreement, while it was formed 2 years ago, consummated 3 years ago, it really has only started this year. And the question is that will it still achieve its full potential post-COVID? So I'm going to unshare my screen, and I will start with my first colleague, someone who has spent, so we have an economist, Mr. K.C. Lee Kwong. Thank you very much for being here today. He's an economist. He's the chairman of Union Pay International Regional Council, and he sits on the board of various financial institutions, including Afrexim Bank. He has a BSc in economics from the School of Economics in London. And I'm not going to read your full bio, sir, but it's an absolute pleasure to have you here. I think your perspective as a banker is interesting. So welcome, and welcome all the way from Mauritius, I believe. Good to have you here.
Yeah, thank you. Thank you very much. Yeah, and good morning, everybody. From Mauritius. I mean, you should know that Mauritius is heavily reliant on tourism. 25% of the GDP of the economy depends on tourism. And if you consider all the spillover of the industry in the economy and the linkages, I mean, more than 50% of livelihoods of people depends on tourism. So it's a very tourism-reliant economy. And obviously, it puts sharply into focus the necessity of rebuilding and reinventing tourism for the very survival of the economy. So when you talk about the economic landscape in terms of financing requirement for rebuilding tourism, I mean, we can start with the very important decisions that every government had to take, which is to intervene very heavily with the central bank, with a large stimulus package, and also with all kind of assistance programs in order to save jobs, or at least to preserve livelihood of people. So we already have a lot of liquidity flowing around in the country. And I think generally within Africa, we are all inspiring ourselves from the European and the American experiment, where liquidity is being floated around through huge stimulus packages. And this liquidity is best not to be wasted. So the first challenge that we are having is to make sure that this liquidity help to preserve at least sanity and health within the population. This is the first priority. The second thing is there is less and less access to external financing these days, because everybody is being very protectionist. You can see it with the vaccine distribution and supply. So with a rising protectionism and global recession taking hold, we have heard of a timid recovery from the global perspective, 3.4% from what I've heard. But the IMF just today announced, or today or yesterday announced, that it's going to be a world growth of 6%. They have revised it upwards. So it means that vaccination is having some effect in the minds of the public, at least. So in spite of all these uncertainties and all the volatilities going around in the world, there's still liquidity, and there's still the will of government to find sources of finance and to raise the limit of the debt ceiling, because it is a question of survival. But the problem is, it's not a question of building back the industry or even building it back better. The problem is having to reinvent tourism completely. That's a big challenge that everybody has, because we can't go back to business as usual, because we have to transcend this current situation in order to have a new economic and business model and a new tourism ecosystem. And this is where, for us in Africa, I think a deep and thorough overhaul have to be done with a whole of Africa approach, in an integrated approach, like what we have done in the vaccine financing program at Afrexim Bank. What we have done, because we knew.
Yes, I believe you've funded 400 million doses of the vaccine. Tell us about that mechanism. Do you regard that as a stimulus package to the economy, or is that how have you felt? It's unusual to see a bank step in and play such a role. I think it's very commendable to see that.
Exactly. We are leveraging a bit on the experience that we had in the past, especially with regard to the commodity crash. You know, there was huge commodity price declines within Africa, and also during the world recession, during the 2008 financial crisis. So a lot of African governments were going under, and we had to come to their rescue. So based on that experience, we have come up with a two-dimensional package. Number one is to make sure that we are not short of vaccines, because we already foresee that there is going to be great nationalism taking place, and the developed countries' manufacturing capacity will be used for their own interests. So we had earmarked a program which is called the Advanced Acquisition Program, where Afrexim has launched a facility of $2 billion in order to guarantee the pre-orders of all African states and to make sure there's an affordable and there's a fairer distribution of vaccines all over Africa. So the Afrexim stand as guarantee to all these governments who have been pre-ordering the vaccines all over the place, to make sure that the manufacturers is guaranteed that payment will be effected once it is being supplied. This is the first dimension, which is a vaccine acquisition program. The second program is what is called the trade mitigation, the trade impact mitigation, because this COVID has severely hit supply chain, has severely hit regional trade, transport, logistics, and everything has been put, as you've just said, into almost a standstill. So there was the risk that there will be shortage of essential supplies, and especially in this case of a regional pandemic, right? It was important to make sure that medical supplies, food supplies, and essential services are still carrying on. So we earmarked a package of $5 billion through this pandemic trade impact mitigation facility. And this facility was aimed at 4 categories of beneficiaries. One is the government themselves, to help them to buy vaccines and to buy essential materials for the economic activities. Secondly, the assistance was given to the central bank because of a shortage of reserves. So we make sure that the central bank has the wherewithals to make payments, international payments, so that they are not dried of funds. And the third channel is through financial institutions. So all commercial banks which were facing a liquidity or which were facing payments problem. So we came to the rescue and gave them the necessary foreign currency in order that they can allow trade to continue. And the fourth dimension was directly to corporates. And directly to the firms themselves, because a lot of firms were totally in financial distress, and with a disruption in distribution and in manufacturing, it was clear that a lot of jobs were going to be lost, and a lot of factories was going to go under. So we go directly into the funding of these enterprises. So 4 beneficiaries.
Thank you, Casey. I've got to go to our other
Good.
So thank you very much for that perspective. Commissioner Ojako, please unmute. I just wanted to say welcome. Commissioner he works at the Africa Free Trade Continental Agreement. Thank you very much for being here and for stepping in for your SG, who's currently in a conversation, I believe, with the Namibian president. Commissioner, you said recently that the Africa Continental Free Trade Agreement is not just a trade agreement, but it's a developmental mechanism. Tell me a little bit about that view. Remember to unmute, yeah?
All right. Thank you very much, Rashid. As we have always maintained, first of all, thank you for inviting the Secretariat for this engagement. As you know, I'm stepping in a last minute for the Secretary General, who is actually right now in Southern Africa, but is engaged with the government of Namibia on the AFCFTA, the processes that are going on. Yes, indeed, the AFCFTA agreement is not just a trade agreement. It's a development instrument. A development instrument in the sense that when you look at the objectives, you'll find in the objectives under Article 3, we talk about the development of regional value chains and the development of industrialization within the continent. But beyond the objectives, the protocol on the trading services under which the tourism falls, that is already open for negotiation. And tourism is one of the sectors that we have opened as a priority sector for countries to open up, their tourism market for negotiation. It's a development instrument because we're going to negotiate a protocol on investment, which then creates a single investment area in Africa so that there is uniformity and there is predictability in the investment environment in the continent. That's why we call it a development instrument. And it's going to catalyze other sectors. It's going to catalyze infrastructure, infrastructure development. It's going to catalyze the interconnectivity in terms of the power networks, the energy networks within the continent, because you cannot talk industrialization unless you have sufficient energy. Now, in the continent, you realize there are countries that have surplus energy and there are countries that are in deficit energy. Now, we are saying that if we are talking industrialization, then we need to have an interconnected grid in the continent for energy, so that those that are in deficit energy can receive from those that have surplus energy. Now, infrastructure, the west must connect to the east and the north must connect to the south. And then air transport networks, that you must make it easier for Africans to travel, because there is a separate protocol on the movement of business persons. That also was, I think, signed sometime before the FCFTA agreement was signed. So it's a development instrument. It's going to catalyze the development of regional value chains. It's going to catalyze industrialization. It's going to catalyze increased production. We know that COVID has definitely had a great impact and a big impact on Africa, but it also opened our thinking that because the supply chains were terribly interrupted by the COVID. So all of a sudden we realized we were over-relying on countries for example, the supply of pharmaceutical products. Now we have a thinking across the continent that we need to do the pharma sector is taking proactive action to ensure that the pharmaceutical industry in the continent is upscaled to be able to address any emergencies that will come. COVID will not probably be the last pandemic. There may be another one coming up. And I think the WHO has said we should begin to prepare for the next one. And I don't know when the next one will be. And that means that we must, as a continent, begin to address some of the challenges that are there. We know the tourism has been hit by about 30%, 30% drop in tourism earnings around the continent. Many countries in the continent rely on tourism. Mauritius, South Africa, in many Kenya, for example, Kenya has been a big tourism destination, but because of COVID, now everything is down. The travel sector, the conference tourism, the MICE, is gone down because of the COVID. But we do hope that with as we begin to adapt to the situation, as the vaccinations rise, that we will probably get back, but it won't be to the levels of the pre-COVID period. We'll probably not get tourism to the same levels as the pre-COVID period, especially in the area of meetings, events, conferences, and so on. Because now what we are doing this morning is going to be a common feature for meetings in the future, except where it is absolutely necessary for us to. Yes.
How close are we to having real movement of people facilitated by the trade agreement, the idea of a single passport or open borders? So we just have 3 minutes to wrap up, and that's why I just wanted that view. Then I'll come back to Casey. Unfortunately, we have very little time. You can give me your closing remarks. So, Commissioner,
I think
how close are we to such practical steps? We know the concept of the free trade agreement, but are we close to getting such practical things, making it possible for physical movement?
Yeah. What we have done now is to bring. We've had the customs administrations come together to ensure that the borders we have harmonized customs clearance procedures across the continent. That's the first thing. Now, in terms of the movement, the African passport is not something that is new. It's been there. It was launched by President Kagame, I think, a couple of years ago, and so the African passport is there. It's now rolling out to the member states.
How do we make it happen?
Yes. So the practical steps are there. We are activating them, the instruments that are within the AfCFTA agreement to ensure that there is free movement of goods and the persons that will be moving the goods across the border. That means that you have truck drivers and so on. Those should have free access across the border. And then many countries are moving, and this is not really our part in terms of the AfCFTA, the immigration. But many countries are now adopting for the Africa visa on arrival. I have been to a number of countries, and many of them are saying visa on arrival. Mauritius, Ghana, Uganda, Kenya, Tanzania, all of them are visa on arrival, including Ethiopia now, which is the headquarters of the African Union.
Absolutely. Casey, can I come back to you just for 1 minute, just to wrap up? So what's your outlook? I mean, I think you've shown that there's liquidity and there's enough money. What's your outlook in terms of when we bounce back and you see that movement? Just one minute as a closing wrap up.
Yeah, my biggest concern is that recovery might be uneven and asynchronous, meaning that there will be a big divide between those who are more developed and those who are less developed. So this is one problem that we may be facing. So for this reason, I think Africa should look and focus a lot on the rebound of tourism in terms of SMEs, because tourism will be totally different, and move to a new business model. So SMEs, local participation, community partnerships, this is going to play a very big role in tourism. And I think financing should be focused into these things. We don't need to bother too much about the big boys and the big groups and others. Let's focus on women, on local communities, on SMEs. And this is where the diaspora also can play a big role, because they understand Africa. They come from Africa and they know how, if we reinvent tourism, if we rebuild tourism, it should be on new foundations and new relationships.
Thank you, Casey. And Commissioner Ojakal, thank you for joining us. I mean, how do we make sure, just your last remarks, we have an African heading up the WTO. How do you make that count? Just 30 seconds as a closing remark, please. Yes.
I was saying that I prefer to focus on what we are doing under the AfCFTA. The WTO is one huge, elephant out there. But we want to deal with what is within our reach, which is the AfCFTA. Because we begin to show the world, the WTO has for long, I don't know, a lot of things are on a stalemate. But Africa is showing the way that regional integration can work, and we believe that the multilateral system can work. We are showing the multilateral system that there is a way to do things. And that is what we are doing in Africa. And we do hope that the WTO will work with us in order to advance the agenda at the multilateral level.
Well, thank you very much. We look forward to your leadership and for you showing us the way. Thank you very much, KC. Thank you, Commissioner Ojako. It's been wonderful to speak to you, and we could have had another hour, but I'm going to hand back now to Rajan Datta for the next session. So thank you, gentlemen. Thank you for joining us.